Mastermind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in roughly 45 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
It's very good, Bryce. I always enjoy these episodes, so very excited to be doing it for another month.
Absolutely. Favorite episode of the month and fast becoming, I guess, one of the favorite episodes of our listeners as well. A lot of great feedback comes in from these, and I can feel the anticipation as we move towards the release date each month. So without, I guess, any further ado, I would love to welcome Julia Lee back for our Mastermind number 4. Welcome to the show.
Great to be here. Thanks for having me.
So for those new to the show, welcome to Equity Mates and our journey of investing as we sort of break down the markets and everything in between. But this episode is, as we said, one of our favorites. How it works is Ren, Julia, and myself will each pick a stock and then pitch it to each other. Now, it could be because we think it has an interesting business model, a great growth potential, whatever it may be. And then we'll have a chat. I guess please note that in no way is this a buy, hold, or sell recommendation, and doing your own research on any of the stocks we discuss is critical. And so this is just general information and discussion only.
Absolutely. I just want to blow the horn before we start on a few stocks that have been, featured in past Equity Mates episode. I noticed that Raytheon, which is one that we spoke about in the past, which is on the US market, that's expected to actually rise quite strongly, given that we saw a drone attack on a Saudi Arabia oil facility over the weekend. So Raytheon, good call, RTN.
We'll add that. So, yeah, I think you raise a good point, Julia. We haven't really kept track publicly of all the stock picks that we have done over the past few episodes. So we'll make a note to put that on our website and make it visible so everyone can sort of track how we're going.
And a couple of other ones, Baby Bunting and Eclipse have done really well as well.
Huge. Yeah, Baby Bunting's had a crazy run since we've discussed it.
Yeah, Baby
Maybe because
Bunting.
everyone's jumped in on the buy.
But, that's why reporting season is important, because it does demonstrate those companies with a strong sort of tailwind behind them. And Baby Bunting was a standout during reporting season.
Also my stock pick of the year, and so you're in a lot of trouble.
I was waiting for that.
Unless Costa can come home strong.
Yeah, I don't think that's going to happen.
Right, so we've got a bit of a mix of stocks tonight. I think Saudi Arabia is going to be a theme, and also we've got tech, and Ren, you've gone for something a little different as well. So, do you want to kick off, Ren?
Sure, I'll go first. I've gone international again, and I'm going to Europe, Amsterdam in particular, and I want to talk about Heineken, one of the largest beer brewers in the world.
Nice.
So Heineken, a bit about the company. It owns 165 breweries in more than 70 countries. It produces more than 250 beers and ciders and employs 73,000 people worldwide. It's the number 1 brewer in Europe and one of the largest in the world. I think since a recent merger between Anheuser-Busch and Saab Miller, it's number 2 in the world. So it does about 27 billion euro in revenue and a bit over 2 billion euro in profit. And it sold about 24 billion litres of beer last year. So a massive company by any respects, and in a massive industry.
Now, I'm curious, Ren, have you just chosen this stock because you like to drink beer?
Yeah, maybe.
Someone said to me, go with the names that you know and trust. I'm
That's it. Well, I've been doing a lot of research on the company. The reason I've chosen this company is the China story that is unfolding in the beer market, and particularly the premium category of the Chinese beer market. There's a long story, and I'll try and condense it as best I can, but essentially to sell your beer as a foreign country, or to sell any product as a foreign company into China, you need to partner with a local Chinese partner. And the biggest Chinese brewer is China Resources Beer that had partnered with one of Heineken's rivals, Saab Miller. But with Saab Miller's recent merger, they had to part ways with China Resources Beer. And Heineken have snapped up the opportunity and have paid $3.1 billion for 40% of China Resources Beer, with the intention to make a very large push into the largest beer drinking market in the world. At this stage, Heineken has less than 1% market share in China, but partnering with China's biggest brewer should see them really make a big push into what is already the biggest beer drinking market, and the premium category of China's market is growing at a quite fast rate as well. So an interesting company potentially opening up a new market, and so one that I thought would be interesting to watch.
Wow, I've never thought of China as being a massive beer market, but you're absolutely right. You know, rapidly changing standards of living, lots more disposable income. It would be perfect for the beer market, and I guess a love of imported products as well. So a premium European beer sounds pretty good.
Yeah, now the interesting thing is that traditionally China was a massive beer market, and the overall size of the beer market is being eaten into by the wine market. Wine is growing a lot faster than beer. What you're seeing in China is that the premium category of the beer market is still growing very quickly. It's just the sort of the lower end of the market is not growing as quickly. But yeah,
fascinating.
45.7 billion litres of beer drunk in China last year. So,
do you know Australia's numbers?
I don't. I know the US is about 20 billion litres. So a bit less than half of China.
Yeah, I know that Australia drinks a lot per person if you compare it to global standards. But I guess China, just in terms of its population, means that it's going to be a much bigger market.
Pure size. Yeah, absolutely.
And look, if you're not interested in Heineken, it looks like a lot of the big brewers in the world are making big pushes into China at the moment. So I spoke about Heineken, and they're partnering with China's largest brewer. Another big international brewer, AB InBev, tried to IPO their Asian business recently and then pulled it. And they've also paid a fair bit of money to become the exclusive distributor for Japan's Sapporo brand beer in China. Asahi has paid $8.2 billion for some of the biggest European brand names, and they're now aggressively marketing those brand names in China. And Carlsberg is partnering with a big Chinese brewer to also make a push into China. So it looks like a number of the big beer companies have the same idea, that China is a big growth opportunity. So it's going to be a very interesting battle to watch over the next, few years or few decades as these big brands fight for this massive market. And for me, Heineken partnering with the biggest brewer, the biggest Chinese brewer, gives them a strategic advantage.
Yeah, that was going to be my question. That makes sense. I wonder where they see India falling into all of this as well. I know that there's a couple of big Indian beer brands, but it would be interesting to see, I guess, with a huge population as well, a bit further down the track where these big brands are going to come in and start tackling that market as well. Yeah,
it will be interesting. There's just the whole brewing market. There's such a power law to it. Like the big brewers seem to just keep getting bigger and bigger, keep acquiring all the smaller brewers, and then you walk into a bottle shop and it looks like you got heaps of choice, but it's really just 4 or 5 companies producing a lot of different labels.
Yeah, it's fascinating.
It's really interesting seeing some of the trends, because over in North America, people are drinking less alcohol, but they're infusing drinks with, CDB, the derivative from
the
Yeah.
cannabis.
marijuana,
Yeah.
Cannabis, yeah.
because in their minds that has a less health impact compared to alcohol. So they're saying it's almost a generational shift that we're seeing. So that will be an interesting shift to watch, to see whether we do see a younger generation embracing a different type of drink. But the one I really like is the glitter beer. I hope that catches on.
The glitter beer.
What is that?
What's glitter beer?
Apparently, you can buy beer with glitter in it.
Oh, what?
With beer.
Sounds awful.
So wrong.
How have I missed this all my life?
There's also that big trend that's coming through, and a lot of the big names in Australia are starting to bring out alcohol-free beer. I know Carlton have one, Heineken have one here as well, and also carb-free. So, picking up on that trend of, I guess, people not wanting the health effects, as you said, Julia, of drinking beer, but I guess still wanting perhaps maybe the taste or that sort of social proof that it may look like they're drinking beer, and in fact they're not.
Yeah, that's a huge market,
it's an
the
interesting
non-alcoholic or the low alcoholic market, because people are a bit more health conscious.
Yeah, absolutely. Nice, friend. Good pick. So you're going to put your money where your mouth is, or?
Well, not at this stage, but I will be watching closely. So we'll see.
Well, I might jump into mine if that's all right, Julia, and then we'll finish off with yours.
Sounds good.
So Ren is certainly aware that I am a fan of the payments market, Julia. So it's no surprise that I've picked iSign this. ASX ticker is ISX. Now, it's been on a great run this year. It listed in 2015, but this has been a year that we've really seen some great momentum behind the stock. So iSign this is a e-money and payments technology company, primarily focusing on the identity side of things. So they streamline the process for online identification, removing a lot of the paperwork that comes with that sort of old school 100-point check that you'd often have to do when signing up to services online. So I guess why is it important? Well, the world obviously is really connected now, and identity and fraud is something that is now becoming more and more common. Identity theft. And there's this thing known as the KYC, or Know Your Customer. And it's what a lot of, I guess, gaming and equities businesses and those businesses that are online that have, I guess, high value, high frequency, a lot of risk and turnover that require these KYCs, or Know Your Customers. So iSign this brings together a total, I guess, process that patented. So to give you a rundown of how they do it. Previously, if you were to sign up to, say, a gambling site or an equities site or broker, you'd have to have a face-to-face interview, certified documents. Then the process was to move into, I guess, that stage where you would get asked questions of what's your mother's maiden name and what was your first dog called. And that was the old school way of identifying who you were online. However, the issue with this century, obviously, is that now all these data breaches is coming in, and phishing and identity theft that is no longer a trusted source. So iSign this brings in a way of identifying these checks by identifying your payment instrument or your card and proving that you own the card. So pretty important in the payment industry at the moment. And yeah, I guess initial thoughts?
I know exactly what you're talking about, because I'm going through this myself at the moment, where AUSTRAC requires you to know your client because of anti-money laundering as well as counter-terrorism financing. So it's all about trying to understand who your client is, so that money doesn't get in the hands of terrorists, or there's no money laundering. So whether it's any sort of monetary transaction, it's a massive market, and it's a global one as well. So a really interesting company. And, the company's up 588% in the past 52 weeks. It's amazing.
Let me ask you this, Julia. Would this iSign this company help you go through your process at the moment?
Now, to be truthful, there's lots of companies that offer Know Your Client and the KYC AML component of it. So a lot of it is already moving towards automation. I guess with iSign this, there's a few other moving parts involved. They're calling it the next neobank. So they have a few different products. They've got iSign this paid entity. They have iSign this pay. They've got Baltic banking service. Then they have something called a Pro Banks as well. So, look, I think it takes that know your client identification process and it takes it a step further, which is pretty interesting. I was just reading up on it as you were talking, Bryce. I feel like I've taken over. But they've just signed an agreement with the Asia Pacific subsidiary of Visa, which is a huge deal.
Yeah, they're making some pretty big headway at the moment. So last year they were really moving towards taking full end-to-end control of all their systems and earmarked 2019 as being one that they could really start to drive a lot of their end-to-end offerings, which you mentioned there was paid entity. So what they wanted to do, or what they are now capable of doing, is, for example, if you were to sign up to a broker or a gaming platform and you wanted to make a trade or a bet within 5 minutes, the old school way would be that you would need to have your your profile identified first, wait a couple of days, and then you could put in money and make the payment. What they are able to do now is they actually reverse that and they take the payment first, and then in the process of doing so are able to identify and verify the customer while the transaction is taking place. So essentially you can imagine from the business's point of view, the return on investment for using paid entity would be pretty significant, given that I guess you'd lose customers in some instances if they can't make the payment straight away. So that's kind of the space they're wanting to play in now. And all of this sort of technology is patented. And they also have huge global reach into, as you saw, that Visa and MasterCard and a lot of sort of central banks overseas as well, Europe and that sort of stuff, so that they can identify customers across the globe and help businesses grow that way. So yeah, pretty interesting company. And as you said though, Julia, it's an industry with a lot of competitors. However, I think this technology is patented and they're offering a bit more of an end-to-end complete service compared to some of their competitors.
So, Bryce, I have a couple of questions about their stock chart because it has raised some things. So the company was founded in 96 and it seemed to do very well during the tech boom and then fell away all through the 2000s, and then year to date seems to have risen about 1,000%, and then in the last week dropped about 40%. So that raises about 1,000 questions for me, but I'm going to start with what have they been doing since 1996?
So they must have taken over a ticker or something, because as far as I'm aware, they listed in 2015.
Yeah, so it would have been a backdoor listing where they've taken
that makes more sense.
over a shell company.
Yeah.
So okay. I think that's what they've done, because they definitely hit the markets in 2015, and I can tell you what they've been doing from 2015, and that's a lot of the back end work. They really didn't hit the market with their product till about 3 years after listing. I mean, revenues, we're talking a very small company here. Revenues for the first quarter, I think 2019, were only $7.5 million. That is up about 50%. But we're not talking huge dollars here at the moment, but their guidance going forward is that, revenue is likely to increase in the big double digits. So as I said, they see 2019 as a year of really going hard on their, I guess, offering. They did have a great run and then dropped about 40% last week, I think it was, because there was a report released saying that $500 million worth of stock or whatever had been distributed to their executives, and there was a bit of, I guess, revolt from shareholders about that, but it's since recovered somewhat.
Only exceeded their performance hurdle by $5,000 or something like that, and it just seemed like such a small amount to
nothing
get over that hurdle for such a large number of shares to be issued. So I think that was the revolt.
Yeah. It wasn't from any sort of fundamental change in their business or anything like that. It was an uproar from shareholders based on
more
exactly
issued
that.
capital.
Yeah.
So are you saying that now might be a good time to buy?
I'm not saying anything of the sort, Ren. Look, let's just say I think it's been on a great run. There's obviously a lot of interest and momentum behind it at the moment. And if things continue in the way that they sort of say that they are, then there appears to be some great upside, but also very competitive market.
This is exactly what you were saying about 6 months ago when you didn't buy the stock then.
I know. But anyway, we'll see. So, Julia, do you want to kick into yours?
Yeah, I thought I'd focus in on the energy sector given the attack that we saw on the Saudi Arabian oil facility. And, there is a bit of a track record in what happens when we do get disruptions in terms of the oil market. Often it can be buy on the rumor, sell on the fact, or sell on the saber rattling and buy on the bullets. And generally in terms of oil, there tends to be a premium when there are conflicts. So we call it the war premium, if you like. So I guess it depends on whether we do see the situation escalate or whether we see it being resolved quite quickly. And one of the things the markets pay quite a lot of attention to these days are the Trump tweets. And he had an amazing tweet after that attack on Saudi oil saying that the US is locked and loaded.
Yeah.
That was a pretty amazing tweet to come from a US president. I guess some of the
Surprising,
questions...
though.
Not surprising knowing President Trump's personality so far. I guess some of the questions are what are the current inventories like and how it is likely to play out. A key question is it going to get worse before it gets better? There's certainly a big disruption to supply. We know that the facility that was targeted, around about 5 million barrels of oil production per day has come offline, and that represents about 5 to 6% of the global oil market. So that is a pretty significant move. Now, the big question is whether that production comes back online relatively quickly or whether that's drawn out for a number of months. So that's one of the things to watch out for. The other is the escalation in terms of conflict, because then we'll see that strength that we've seen in oil prices last a little bit longer. I guess what is a little bit different is that the US does have a huge supply of emergency oil, something like 645 million barrels for scenarios like this. But in terms of the oil market, a lot of it does have to do with sentiment, and I think that the market does trade with a war premium when you do see conflicts like this. So look, if we have a look at some of the past instances during the Iraq-Kuwait conflict in 1990-1991, we saw Santos, for example, start at $3.20 in January 1990, and 1 year later, in January 1991, it was at exactly the same price, $3.20. But in between, it had spiked to a high of $4.14. So look, this is probably more of a trading opportunity than a longer-term investing opportunity. But we know that from past scenarios that we can see these sort of prolonged spikes in oil prices, which generally spike over a 6 to 8 month period if we do see an escalation in terms of the conflict. So given that we are seeing a bit of attention on oil, I thought I'd point out one of the oil stocks that I do like at the moment, and that is Santos. STO is the stock code there. Now, this company in the past has been a bit of a basket case, but it's a vastly different company from what came out of the global financial crisis. And I guess one of the things in Santos's favor is that it does have a really strong balance sheet. In fact, one of the strongest balance sheets in the sector. And also, if we have a look at how they've been operating, their business has been operating beyond market expectations. So their operations are going really well. The momentum is looking good and the growth picture is looking good as well. So look, the two I like in this space are Beach Petroleum and Santos, but I guess Santos is my preferred over some of the big names like Woodside Petroleum and Oil Search. So that would be my pick in the space.
Now, Julia, you mentioned that Trump tweeted that he was locked and loaded. Do you worry that your pick might be thwarted by another Trump tweet when he tweeted in all caps just "plenty of oil!" exclamation mark?
Yeah.
It means olive oil, Ren.
That is an emergency oil supply. And I guess it depends on the escalation in the conflict and how long the conflict goes for. So, yes, that tweet that he did have plenty of oil did bring a little bit more calm back to the market. But I think even before we saw this spike up in oil over the weekend and the attack on the Saudi Arabian facilities, oil prices were primed for probably a move up. I think the market had become too pessimistic optimistic in terms of the oil price. So look, I just think we were oversold at this point anyway, but the Saudi Arabian conflict really just brought the energy sector back into the spotlight. I mean, we are at I guess in a world where we are seeing a stronger US currency and a weaker Aussie dollar, and that really should be good news for some of the oil miners here in Australia. So look, I think that this has brought the spotlight in oil. It's not the only reason to be in oil, but because of the concerns around global growth, we have seen oil hit pretty hard in 2019. But look, I think it's about time for a bounce, and this might have been the impetus that the energy space needed for a mini re-rating.
I think people are probably not too familiar with this idea of a strategic oil reserve. So to ask a question on it, if the US release oil into the market to keep supply going, doesn't that mean at some point they're going to have to be in the market buying that oil back to top up the reserve? So even if Trump releases it in the short term, there's still going to be that extra demand pressure longer term that will help prop up the price of oil?
That's a really good question, and I think there are a few undercurrents which are happening at the moment. And when the emergency oil reserve was put into play, it was at a time when the US was importing a lot of oil. So it was a strategic decision that if there was conflict and they needed access to that emergency supply, that it was there. But in the last few years, what we have seen is a reversal of that, and the US is actually a massive producer of oil. Don't forget that Saudi Arabia still wants to IPO Aramco, and the longer that they're out of the market, the more that the US can gain market share in that crucial oil market at a time, which probably hurts Saudi Arabia. So Saudi Arabia, I think, has a great impetus to try and recover their oil operations as soon as possible and not lose market share to some of their competitors, especially the US, which has become a major oil player over the last decade.
Yeah, well, speaking of the recovery and I guess the lag effect, I'm sure there are a number of people that probably put in some off-market trades over the weekend in hope of catching the jump when markets opened this morning, and maybe, the same in the US markets tonight. And so I read the Bloomberg report this morning, that Saudi Arabia will probably restore almost half of their oil production lost over the weekend by as early as this morning, according to some insiders. So to your point, Julia, I'm sure they're doing everything they can to, speed up the recovery process as quick as possible, which I thought is pretty phenomenal, to be honest, if they do manage to do that.
So there's a few things happening here. There's the underlying asset price, which is the oil price. Secondly, there's looking at the energy sector and the valuations and the growth potential of stocks in that space. And I like Beach Petroleum as well as Santos. But thirdly, this has been building for a while in the Middle East. So although this is, a strike on a Saudi Arabian oil facility, the question is, what's going to change in the Middle East to, calm the conflict? Or are we going to continue to see this simmer away, and are we going to start to see, more tensions in this space? So, these are questions that won't disappear or be resolved overnight, but I think they're the three key things to be watching at the moment. Not only the underlying oil price from a day-to-day perspective, and no doubt there are a lot of, political viewpoints happening at the moment, whether it's Saudi Arabia, whether it's the US, whether it's other countries within the Middle East, but also, why is that conflict there, and will that conflict go away? And I think that's an important question to be asking when you're looking at the energy space as well.
Yeah, fascinating. Nice. Ren, do you have any further questions?
No, I just am really struck by how pessimistic some of our picks have been between Bryce's D-Bus pick and then Raytheon, and now we're betting for Middle East conflict. It seems that there's a very pessimistic view of the world here.
Yeah, well,
I like to think that we think about what's changing, and some of the things that are changing are negative, and it's always change which causes a change in the valuation of underlying companies.
Well, three very different picks there. So we'll add them to our list, our tracker, and see how they go over the medium to longer term, short term, whatever we want to decide. Julie, I just thought I would also let everyone know that if they want to hear more from you and ask you questions directly, you're actually going to be joining us at our live event in Sydney on the 29th of October. So very much looking forward to that. And if anyone does want to come down and listen to more of Julia and some of the other fantastic guests that we'll have, make sure you get your reservation for that 6 p.m. at our General Assembly campus.
I am so excited. Equity Mates Live. No questions that are off the table.
I know. We'll have to keep Ren locked up. But
that's a bit harsh.
No, very much looking forward to it. It's going to be a fantastic evening. But more details on our Facebook page and website if you're interested in coming to that. So I guess we'll leave it there. Another really interesting mastermind for this month. Very much looking forward to seeing what we come up with next month, and also, I guess, check in on the performance of these stocks over the next sort of 30 days or so. Some big things in play. So, Julia, thank you very much for joining us again.
Lovely.
Appreciate your time, and we will see you live in October.
Woo-hoo.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.